Is I know I've already mentioned your name, but you introduce yourself, and you will not allow the members to introduce themselves because of the time. And as you know, it's expanded, so we are many. So you can do the introductions, and then we will start.
Thank you very much, Mr. Chair. My name is Sokwani Chilembo. I'm the Chief Executive Officer of the Zambia Chamber of Mines, the largest, the association of the larger copper and emerald producers in the country.
Thank you. Thank you. My name is Fred Jatila, a Member of Parliament for Momba constituency and also chairperson for this committee. So, Mr. Chilembo, we will start, but before we do that, Cap 12 of the laws of Zambia gives you immunity as and when you are appearing before the committee of parliament such as this one. So meaning whatever you say was appearing before this committee can never be used against you in a court of law. Except in an event that we were to maybe deliberately mislead the committee, then the same provisions works against you. And also just to indicate that we are live on the Parliament TV. So our people out there are following our proceedings. So what we'll do is we'll give you 15 minutes maximum if you need, because we looked at your submission very straightforward. If you need all of that, just to take us through those salient points. And then we give members maybe another 10 minutes to ask questions, and then we'll let you go. So you can start with your presentation, sir.
Right. Thank you very much, Honorable Chair. As you say, the points are pretty much straightforward. The industry is very pleased that we continue to move in the direction of making our mining fiscal regime competitive. I think you can see from the data in the report where we were sitting as of this year relative to a lot of our competitors. And we appreciate that the Minister has continued to fulfill the commitment he made in last year's budget to improve the regime over time. Obviously, we would love for us to become a below average effective tax rate destination as soon as possible, because this will accelerate the rate at which we do deals and attract capital. But we do understand that government has a lot to balance on its plate. That said, the move to implement the incremental sliding scale on mineral royalty is very welcome, because this is one of the prime levers to move us to becoming competitive. Obviously, government's commitment to maintaining a favorable regime going forward has also been received very well by the Chamber membership. There are some residual issues that still remain to be dealt with. In the gemstone sector, our members continue to face a royalty of 6% when the other competing jurisdictions of Colombia and Brazil only pay 2% royalty, and it's recommended that a 3% royalty be afforded the industry to improve their competitiveness, because even though our stones are of higher quality, this disadvantages us on price in the international marketplace. With regard to the restoration of the VAT cycle, like every other industry in the country, there's a lot of working capital tied up therein, and we are grateful that government has really proposed a time frame over which to resolve this, and if that can be expedited, this will be another big plus, which will free up capital to enable the industry invest more in capital expenditure and ramp up of production. We are very grateful that the small-scale mining regime has been structured now to, one, lower the effective tax rate for small-scale miners and bring them into the formal fold as an alternative to trading illicitly. And we are very hopeful that this will expand the formal tax net and create sustainable jobs in the small-scale mining sector. The industry is also very grateful for the creation of a royalty regime for the small scale as well, because all this simply adds to making sure that we have some of our own people beginning to participate more in a sector which has traditionally been perceived as an enclave foreign industry. There are some hygiene issues, obviously, on the removal of the waiver on fuel, which I think will be taking place towards the beginning of next year. The industry does propose as a mitigating measure that the claimability of VAT be normalized from the limitation it's at now back to 90% as it is for other industries. This is both on electricity and fuel. And in terms of attracting new exploration, we are very grateful that the Minister reduced the property transfer tax rate, and though we are waiting to see the legislation, we are confident that the double taxation element that was outstanding on this point will be resolved therein, and will enable us to ramp up the rate at which investments are being made in the exploration sector, because if we're to meet our production growth ambitions, we need to grow our reserves well above the 20 million tons that we are at today. We need to head somewhere in the region of about 60 to 70 million tons. To do that, we need to invest a minimum of $200 million a year in exploration for 15 years, and this measure is a good first step in that direction. And that said, we are appreciative, like we said, of the minister's moves to deliver the improved fiscal regime over time, but we would urge that we do watch movements in the market to see if we don't fall behind, just in case our competitors move ahead of us and the market tips from the current seller's market situation to a buyer's one, and we find ourselves flat-footed and unable to transact a lot of the projects that we have in country. I think that really summarizes our points, and I'd like to thank you, sir, and take any questions.
Thanks a lot. Honorable members, any questions? I see three hands. Honorable Jamba. Okay, so we'll go like this: Honorable Jamba, Honorable Chonde, Honorable Pira, and then Honorable Dr. Kalila. In that order, Honorable Jamba.
Thank you, Chair. Good morning, witness. Witness, there is always a budget when it comes, like last year's. There were some incentives which are given to the mining industry. Even this year, you have been given incentives. The people, the ordinary taxpayers are saying, it seems you people in the mining industry, you always want to keep yourselves happy when you see that this incentive is given. Instead of pumping more money into the industry, again you cry for another thing next year so that you are given more incentives. So even next year you start crying, no, we still need it. That's why people are rushing to go to Congo, people are rushing to go to other countries. Meanwhile, don't see anything, even when you are given incentives. What do you take of that?
Thank you. Honorable Chonde.
Witness, good morning. My name is Chonde Saka, Member of Parliament for Milenge and Luapula. You have described the whole approach by government in terms of tax regime as stable and very good, you as experts. Now, you went on to say there are still some residual issues there. Could you share with the committee what are those? Could you be categorical and highlight why you feel the government hasn't done it, hasn't attended to anyone? Or what is motivating you to say residual, which is bringing the discomfort? Thank you.
Honorable Piri.
Thank you, Chair. Good morning, witness. My name is Peter Piri, Member of Parliament from Kaika constituency. Yeah, I have one question on the production which the Minister proposed in the 2023 budget. He proposed to raise the production of about 3 million. I don't know whether that is achievable according to you, or just a comment from you. Thank you.
Honorable Dr. Kalila.
Thank you, Chairperson. I've got two questions. One is with regard to the intention in the long term to reach 3 million tons copper production in our mining industry. And quite often there's been a comparison with the Congo, who are said to be already operating at a higher production rate than we do. I do know,
Maybe you can move closer to
I
the
do know,
mic.
for example, that in terms of stability, when you compare the two countries, I think we have generally been better off. So what would you like to tell this committee which Congo is doing right, for which they have surpassed us in terms of the tonnage which they're producing currently, or what they're doing right or what they're doing wrong? It could be the other way. Maybe investors are just taking advantage of some of the challenges and difficulties which are there. Secondly, quite often when we talk about mining, there's always a temptation in this country because of history and so on and so forth to talk only about copper. I have noticed that you have alluded to gemstone mining as well in this country. How well is our gemstone mining doing in this country? And why is it enjoying a low profile?
Thank you. Mr. Chilembo, you can respond to those.
Thank you very much, Chair and honorable members. Honorable Njamba, the issue is that we must understand that what we are correcting is damage that's been accrued over a long period of time. We as a country, and this pertains now to even some of the other questions that are following. If you look at our history, we were one of the top producers in the world in 1969. 3 other countries were with us. We had Chile, Peru, and the DRC. And just for comparison, as regard to strategy and policy, we'll throw in Botswana as well. Now, if you look at how the countries that stuck to maintaining a stable and globally competitive tax regime have performed over time, you will see that we have missed multiple opportunities to lift ourselves up in every respect of development. Chile maintained the competitive and stable strategy from 1969 through 76, and by the early 2000s, they were producing 5 million tons and had become an advanced economy. Peru, like us, had challenges from the period from 69 through to about 94 because of nationalization. Not enough reinvestment was being done, their production fell off as well, and they actually surpassed us in 1994. But when privatization began, they stuck to a competitive and stable tax regime, and today they are quite high above us in terms of the Human Development Index, and they have a project pipeline, a mining project pipeline that is double the size of our GDP. It's between 46 and 50 billion dollars of projects which are going to lift them from 2.3 million tons where they are, and which they achieved over the 21 years from privatization, to 5 million tons in the next 10 years. So we're not alone with very grand ambitions. If you look at the DRC, they were behind us in the 2000s and overtook us in 2013, and over 12 years of consistent investment, they are now on the cusp of reaching 2 million tons of production per annum. If you look at Botswana, which was consistent in terms of stable and competitive fiscal regime from 1970 to date, they have made huge strides, not just in terms of GDP per capita, but also in terms of the human development indices. This is a metric that measures overall development, quality of life, school, education, longevity, morbidity, mortality, all these things. And if you look at what stable and competitive has delivered over time, in these 3 other instances, they have fared far better than us. So if we focus too much in the short term on perhaps a feeling that the industry is being afforded too much, at the expense of probably social expenditure. We must understand that in the fullness of time, as growth accumulates, the headroom is found from which to make all these necessary social investments, and therefore they come along anyway. If we make the mistake of going back to what we have been doing for 50 years, which is trying new things out every year, over the last 15 years we've been trying things out every other year, we will fall even further behind. And there's a very simple metric other than what has happened in the DRC that we need to be very aware of right now. If you look at the total fiscal regime and circumstances of Botswana, even though their grades are half of ours, people are going to invest in developing mines in that country. And if we don't maintain the course that the minister has set out to become more competitive over time, because remember that we have become uncompetitive over the last 15 years, and this has translated for everybody in business in this country into a risk premium higher than any other country in the region, even the DRC's. It's very counterintuitive, but this is the fact. So we need to maintain the low the competitive fiscal tax strategy and stable strategy, because it delivers over time. And to deviate from it, we will only do at our own social peril as well. Because if we make the social expenditure now, we'll be broke and looking for money again. Better we stick to the knitting, grow the revenue, pay the debt, and then begin to plan the way that our friends do. They only do human development considerations in their budgeting. A lot of people are very surprised at the budget having such a strong social component, but that is how it is supposed to be done. Leave the growth to the private sector, and when we deliver the headroom, you do what is necessary. So we would urge everyone to understand that the numbers support this kind of a strategy as delivering the most holistic growth and development when you are a mineral endowed country. And we have 3 instances of where we've missed it. Let's not miss the train again. Coming to Honorable Chande on the residual issues, we've outlined some of them in the submission. We've talked about the uncompetitiveness of the royalty regime on gemstones. That is one. One of the other key residual issues, obviously, is the restoration of the VAT cycle, because a lot of industries, not just ourselves, are owed funds in that area. And if you don't close this, then it means that when you come to Zambia, you know you have a revenue leakage. So it doesn't play very well in the market in terms of attracting capital. The double taxation issue is something that we are looking forward to being resolved, because as we've mentioned earlier, exploration is a key prerequisite to getting anything done. And if you look again at this cluster of countries that we are comparing ourselves to, the Chileans spent close to $400 million a year for about 40 years from 1976 to build up reserves to the point where they could support production of 5 million tons and attract investment to support a 5 million ton production level. The Peruvians, we privatized at the same time. They stuck to their knitting as well in terms of policy and consistency, but they actually attracted $500 million of exploration capital consistently for 21 years to get to the 2.3 million tons they're at today and the project pipeline that they have coming up. If you look at the DRC, again, all they did was they just maintained the stable regime for 10 years, and they attracted $200 million of exploration capital per annum for those 10 years. 12 years later, they're on the cusp of getting to 2 million tons of production per annum. If you look at ourselves at privatization, we were at 12 million tons reserves when we began privatizing in 1994. By 2000, that's just 6 short years, we had restored reserves to 20 million via the participation of new entrants into the exploration market and the country. So we really need to ensure that we tick off all the boxes in terms of being competitive so that we get more than our fair share of global investment capital around the world. We have an opportunity right now. Our competitors in South America have turned and now really want to consider things like nationalization. So capital is thinking twice about being applied there. This is our chance to step in, and if we can clean up these hygiene issues quickly, we can get more than our fair share, which is what we need to meet the production ambition that government has. Now, is the ambition attainable? We're in the only place in the world where you can mine copper, cobalt, and nickel all at once in a deposit if you are lucky, as is the case in Mazabuka at Mavisa, far south of the traditional catchment area of copper mining. We are seeing copper, iron, gold assets in Mazabuka, in Sasare, in Eastern Province. You've got Kangalui here in the game area, which I think is also a copper, iron, gold deposit. There are deposits being discovered in Luapula. We have the zinc manganese belt running from Kabwe into Serenje into Mansa as well. And we are also seeing the Lufilian Arc, which is the geological feature that moves from our traditional copper belt into the northwestern province where we have the big open pit mines, also manifesting in Sesheke, for example. There's exploration activity going on there. So given these opportunities, the wise thing to do is to exhaust them. If we are even 60% successful as regards the government's goal, we can assure you that's at least a doubling or so of the nation's GDP, more jobs. And the other thing that we must also understand is that the mining sector is catalytic. If we also get our localization of portions of the value chain correct, what you will find in a lot of these economies that have developed this way is that mining services and mining products that are competitively produced in country become a big component of the non-traditional export mix. This is what has happened in Canada, in Chile, in Peru, and even in Australia. So if we can be very diligent and granular in our strategy as regards localizing the value chain, we can actually help to diversify the economy in the process, and also via exploration diversify the mix of minerals that we export. But there's another element to this, and this is very critical, because without it we will not get two things right. Everyone likes to speak of empowerment, but how do you do that? The main constraint that any business in the Republic of Zambia faces is access to capital. And this is true for small-scale miners and explorers as well. So for some years, the Chamber has been proposing that we try and create a link between the capital markets and exploration. How this is done in other jurisdictions is that in the year of investment, an institutional investor will receive an income tax break for taking shares in an exploration venture. If you do this, all of a sudden, you don't need to leave town to find money to finance your drilling. And all of a sudden, pension funds and insurers become interested in what's going on. The shares that they acquire enter the stock exchange, deepening our stock markets and their capacity to hoard, well, I don't want to use the word hoard, consolidate capital for use by entrepreneurs that have a chance out there. Now, if we don't do this, then what will happen is that we will continue to export this opportunity for financial depth, the best opportunity in 100 years because of the way the copper demand cycle is going, driven by green considerations. We will be exporting capital gains because those shares of those companies will be accruing value in other jurisdictions. At least let them even be dual listed here or something. And then we'll also be exporting competencies and investment banking jobs, which we all need if we're going to build businesses in the Republic of Zambia. This is what our colleagues in Zimbabwe and Botswana do, and even in South Africa, as the ordinary course of business. If we don't create this pillar, then I'm afraid it will still be a huge barrier to entry for Zambians to go abroad, raise capital, and get involved. So these are some of the prerequisites to achieving the goal that we must attain, in addition to the fiscal and regulatory environment concerns. So it's a stretch goal. Let's not beat about the bush. It is a very ambitious and audacious goal, but as you can see, it has been done before. And I think if there's anywhere on earth that you can do this, it's here. Yep. As regards what the DRC has been doing from Dr. Kalila, because I think this also covers Mr. Piri's question to some concern about the 3 million. But coming to Dr. Kalila's question, really the DRC, yes, is an operationally more challenging destination than Zambia, but believe it or not, in terms of mining fiscal policy, they have been stable and strategic. So strategic, in fact, that after the 10 years of stability that they had in place, when they did make changes to their regime, they discounted our regime to ensure that they beat us to capital in the marketplace. What they did is on copper, they continued to discount us, if I think back, I think it was about 1.5 or 2%, but they increased heavily on those minerals which are found with copper, in which they had significant global market share: tantalum, selenium, tin, and cobalt. So on those they went very, very high, but overall they were very smart, and as a result, some of our own chamber members, also because of some of the constraints to the environment here, actually opened smelters there and have invested heavily in mining there. So they ate our lunch. That's just the fact, by doing far less than we did.
Okay.
Yeah.
Are you remaining with any? Time is not with us.
I think that was the final question. Yes?
Yeah. We have covered the questions which we had intended to. Honourable members, this is where we come to the end of our discussion with the Chamber of Mines. Mr. Chidembo. Yes, honourable members, we are out of time. Mr. Chidembo, Cap 12 of the laws of Zambia in terms of the immunity ends here. Thank you very much for coming before the committee. You can see there are a lot of hands from our members, but as I said, we have 2 more witnesses waiting for us. Would have in fact loved to have quite a bigger part. If you have been watching the debate about the budget in Parliament, the main chamber, I think the more issues has to do with your industry, the mine. And you can see members are restricted in terms of the time. I wish we could have had another opportunity where we could engage without really essentially looking at the issues of time to get more from you. But as I said, the time is not with us, so we end here. Thank you very much for coming through.
Thank you very much, Mr. Chair, but I have no doubt that our members who follow will be able to address a lot of the residual concerns. Yeah, thank you.
Thank you.